Well, welcome everybody. Steven Sitkowski here. Glad to have you for my market insights and a big welcome to the month of December. I learned something this morning. My dog, which is a Cavapoo, is a snow dog. So we got snow yesterday and wasn't really sure how we do with snow on the ground, but when given the choice between walking on the pavement where it was mostly dry or walking in the snow-covered grass, he opted for the snow-covered grass every time. It's kind of cool to watch him. Amazing the things you learn about your little animals if you just observe. But you probably didn't come for that. I mean, you should have, but I doubt that you did. So let's get to it. It is December the 1st. What a year. First of all, I say this every December. I can't believe we're in the last month of the year. It went by quickly, but I'm happy to say I try to squeeze something special out of every day. It's just kind of the way that I live my life. I think that's happened more as I've gotten older. I've got a birthday coming up this month, pretty special one. And I have one goal, that is to be able to ski on my birthday. So the snow for me was welcome. Everybody else is, oh no, we've turned into winter. Yeah, it's an awesome thing. Anyway, everything that we do here is for educational purposes only, not intended as investment advice. So everybody has to make their own investment decisions. And I just had to check something real quick. We're in good shape. So the Nasdaq rallied 5% last week. So as I'm sure all of you know, on Thursday the market was closed. Friday it was open for basically half the day, closed at 1 Eastern instead of 4 o'clock Eastern. So even though with a shortened week, 5% move, it's great. The Dow and the S&P were up 3%. So the previous few weeks were pretty dodgy. So it was nice to see that recovery. And today the market opened lower. It looked like there was some profit taking going on, but it's been trying to claw its way back. We'll see how it ends up closing for the day, but everything looks pretty strong at the moment. Stocks are typically bullish in December. Market generally goes up more than 1% for this month. So December's a good month. January, both of those are typically real opportunities. NVIDIA putting in 2 billion into Synopsys, which is a software and an automation company. And I'll tell you what, NVIDIA is going to take over the planet. They're making all of these very strategic investments and creating these wonderful partnerships that I think are going to serve them for at least the next decade. 10-year Treasury, pretty stable, just slightly more than 4%. That's a great interest rate as it relates to equities. Remember, the stock market likes low interest rates. On the 10th, we are going to be um, having the next Fed announcement. So I suspect we're going to see an interest rate cut, but that will be fairly well debated among the voters. So something to look forward to. Well, prices, they haven't done anything, been hovering around 60. Um, Chevron, I think, represents pretty good value in terms of relatively low PE, nice dividend in the right space. Pretty good stock, I think, for covered calls at the moment. So this was the market breadth from last week. Um, Pretty phenomenal, as you probably expect. On the New York Stock Exchange, 2,400 stocks were higher, 439 were lower. On the NASDAQ, almost 4,000 stocks higher to 1,000 lower, similar percentages. 207 stocks hit new highs, 52-week highs on the New York Stock Exchange compared to 64 that hit new lows. On the NASDAQ, 384 hit new highs, 256 hit new lows. So all in all, when the NASDAQ goes up 5%, the S&P goes up 3%, that's kind of what we would expect. Last week's heat map, all full of green. Um, Over here in consumer cyclical with Alphabet, formerly known as Google, that thing's been on a tear. So it was up on the week, 6%, Meta, almost 8, Tesla nearly 10, Walmart, 5.5%, Amazon, similar. Um, Broadcom, big move, 15%. Palantir, 7.5%. So lots of great stories for last week, again, as you would expect. Stocks trading above their 20-day moving averages. So it's kind of a nice short-term momentum indicator. We want to see that north of 50%. It's at 76% right now, almost 77%. And that's just an indication that um, in recent times, stocks have moved higher. So a moving average is the closing price of a stock over some specified time period. And in this case, that time period is 20 days. And you can see, I mean, it is, you know, right up, not quite, but nearing those levels. And that's an indication that the market is on a tear. We've seen a lot of sector rotation. So, kind of the laggard of the 11 sectors that make up the stock market has been healthcare. And look, so people have gone in there looking for value. And look where they're not looking for value in technology. So, these are ETF returns by sector from the end of October to the end of basically November. So it's really interesting. When I teach classes on the markets, I always talk about sector rotation, and you need to be aware of which sectors are moving in the right direction versus which have turned bearish. And, there's an old saying in our business that the stock market is like a tide that floats all boats. That is not accurate. A sector is like a tide that floats all boats. If you've identified a bullish sector, 80 to 90% of the stocks within that sector are moving higher. But then you got to keep an eye on, how do you do that? You take the ETF, right? If you wanted energy, for example, that's XLE, and you look at it on a chart. You go from left to right. What's it doing? Going higher, lower, or staying about the same to identify the momentum. And there's probably not 1 in 100 people that do this, but 100% should if you're in the stock market. You've got to know what's happening with the various sectors because sectors do rotate. Investors are fickle, right? They love tech, they hate healthcare. They love healthcare, they hate tech. I've been watching this for 40 years. Third quarter earnings surprises by sector. So the big winner was healthcare. So they talk about earnings as the mother's milk of the stock market. Everything else being equal, if earnings are going up, stock prices go up. So about 82% of all the stocks in the S&P 500, by the way, the S&P 500 is an index consisting of 500 large cap stocks. Almost 82% of them beat the analyst estimate. Now, the analyst will typically shoot low, and companies will kind of downplay going into an earnings because they want those beats because it moves their prices higher. But you can kind of go sector by sector. So 93% of healthcare issues ended up beating. 91.1% of technology stocks beat. Financials, banks and insurance companies, 86.7%. Consumer staples, the stuff you and I have to buy, food, clothing, etc. That's where you find the Walmarts and the Krogers. 90% of them beat. Big underperformance in the communication services area, but 82% beat for the S&P, strong. And the winners are for last week, Broadcom up 18%, Intel 17%, Western Digital 17%, and so on down the list. And Tesla had a really nice week. With all of that being said, market sentiment is still bearish. So, and I report this every week to you. There's a survey that's done of independent investors asking them over the next 6 months, are you bullish, bearish, or neutral? And the latest was 32% said bullish, 42.7% said bearish. And I keep bringing this back to the fact that the media does everything they can to scare the hell out of people, because when you scare people, people are going to come back and listen to what you have to say. So you could have a market at an all-time high, but if there's enough negativity out there, then you end up with survey results like this, in spite of the fact that the market is moving up. Let's check the charts. When in doubt, look at the charts. So we're going to find the SPY. You can use either the SPY or the SPX, same difference. The SPY trades at 1/10 the price of the SPX, but both are a proxy for the S&P 500. So, just kind of quick glance, what I typically look for is, first of all, this yellow line is a 50-day moving average. What is it doing? It is sloping higher. That's bullish. And are we above or below the yellow line? We're above. So that would also be bullish. Now, as I look at this chart, a couple of other things that are worth noting. And that is, I'm going to draw an upper trend line here. So that upper trend line is sloping down. The lower trend line is now moving higher, and we have formed a wedge pattern. And a wedge pattern is what's known as a breakout pattern. So kind of the market is spring-loaded, waiting for the next catalyst, which might be December 10th, when the Fed makes its next announcement. I'll tell you this, I'm not sure how much a rate cut does for us. I think it's pretty much baked into this. But if they don't cut rates, watch the market pull back 5%. The market feasts on low interest rates. And not only are they counting on the Fed to cut in December, but to cut a couple of times next year as well. So we'll just kind of be sitting back. We don't have any real earnings announcements as a catalyst. So I think this is all going to be pretty much coming down to the Fed and what they do. I think that'll be the next kind of big deal. So anyway, I hope your December is off to a good start. Hope you had a fantastic Thanksgiving. There's so much to be thankful for. And I will be back with you next week. Until then, be safe, be blessed. Bye for now.